Q4FY23 earnings conference call of Pricol Limited, hosted by Valorem Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, Mr. Sonpal.
Thank you. Good afternoon, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Pricol Limited. On behalf of the company, I'd like to thank you all for participating in the company's earnings call for the fourth quarter and financial year ended 2023. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Vikram Mohan, Managing Director, Mr. P.M. Ganesh, Chief Executive Officer and Executive Director, Mr. Siddharth Manoharan, Director of Strategy, Mr. Priyadarsari Bhatia, Chief Financial Officer. Without any further delay, I request Mr. Vikram Mohan to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj, for that introduction, and a very good evening on behalf of my team participating today. And thank you all for your participation in this earnings call for Q4FY23 and also for the financial year ended FY23. Without further ado, I will just go straight into the presentation and we'll be able to take questions at the end of the presentation. Can we have the presentation, please? The key financial highlights consolidated of the company are revenue from operations, EBITDA and EBITDA margin of 12.23% for the quarter ended FY23 are in the top left corner. And for the financial year 23, our revenue from operations has been 19,028 million, EBITDA of 2,358 million, and an EBITDA margin of 12.39%, with a PAT margin of 6.04%. This excludes exceptional items of 97.5 million. Without the exceptional items, we have had our highest ever annual and quarter four sales in the history of our company. Some of the business highlights in this quarter have been significant production capacity enhancements in our tool room, plastic component manufacturing shop, and our PCB assembly lines by adding new state-of-the-art lines from top-notch manufacturers in Japan. We have also been fortunate to receive 2 awards, one from CII as trendsetters in business innovation for the various innovations done on driver information and connected vehicle solutions, which is helping us in the premiumization of our product range. We have also received an award from Honda Motorcycle and Scooter for Best Delivery Management at their annual supplier conference. Next slide, please. Our quarterly consolidated performance, our revenue from operations have grown by 26.26% over the corresponding quarter in the previous financial year. Our cash profit has increased by 33.65%, EBITDA by 14.06%, and profit after tax by a record 126.87%. On a financial year FY22 versus FY23, our revenue from operations have grown by 26.85%, which is far in excess of the market growth. EBITDA growth has been 23.41%, cash profit 45.5%, and profit after tax by 125%. Next slide, please. These are again figures in detail which are already uploaded, and I'm sure all of you had an opportunity to go through. The key point to note is our EPS has more than doubled in this, and we have hit an EPS of 2.45. On a historical statement, FY20, 21, 22 and 23, we have the numbers. FY22 has been restated because of the merger of our small wiping division, which was erstwhile consolidated as a subsidiary and now has merged as a division of the company, and hence the need for the restatement. There is no significant impact on account of that, but these are the numbers. And FY23, we've had an EPS of 10.23 rupees per share. Some of our balance sheet statements, you would notice that we are almost debt-free and have a very favorable debt-equity ratio, and also have very favorable financial ratios in our company that we have achieved in this financial year. Just to give a synopsis of our stock performance, where we stand today versus the Sensex, you would realize that we have fairly outperformed the Sensex. Thank you very much, and all other details are in the slide that has been uploaded, and we would be happy to ask some questions. Some housekeeping rules for the benefit of all the people in the call today. Kindly restrict yourself to one question at a time and join back onto the call for your next question. Thank you very much.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star then one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star then two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Yash Dante Vadia from Dante Equity Research. Please go ahead.
Hi, congratulations on a good set of numbers. Am I audible?
Yes, Yash, good evening. Please go ahead.
Yeah, so my question is regarding your target of top line of 4,000 crore, which you've given. So how do you plan on reaching there, and by when do you plan on reaching there?
Top line of, sorry, can you repeat again, please?
Top line of 4,000 crore, you've given a target, right? In the next, by FY26, if I'm not mistaken.
That's right.
Yeah, so how do you plan on reaching there? And by when do you plan on...
In the earlier investor call, but I would be happy to answer that again. We have a clear order pipeline for the next 3 years, number one. Number two, the area of concern is our exports, which we will not achieve our desired target. As of now, we have a visibility to hit about 3,600 crores. We have a capex spend of about 600 crores also that we have undertaken, which over the next 7 to 8 quarters we will complete. 400 of which will be used for organic and 200 of which will be used for inorganic. And we are fairly hopeful of, with this inorganic spend, reaching that 4,000 crore top line with a steady state EBITDA of about 13%.
Okay, thank you. I'll just come back in the queue.
Thank you.
Thank you. The next question is from the line of Kaushal Kedia from Wallfort PMS. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. Sir, I just wanted to know, in BICVS, what are we doing? Are we doing build to spec or are we doing build to print?
Good evening, Kaushal. That's a good question. The product is co-evolved with the customer. So it's not a build-to-print or a build-to-spec product. It is co-evolved with the customer as to what is going to be the positioning of the vehicle and what will be required to attract ultimate end customer to the vehicle. And we co-evolve the product with Pricol's proprietary solutions. Does that answer your question?
So you're saying you're doing something in the middle. You're doing more of value addition than build to print. Is that what you're saying?
Yes. So we co-evolve the product. We arrive at what would be the right pricing for that product, and in that, what should be the value of the driver information system, and what features can be offered on that. So it's co-evolved as a solution with the customer. I don't think we are really building a product, but rather we are moving towards building a solution for the end customer based on market research of the OEM, and then they work closely with us. I think gone are the days where, like in our other division, ACFMS, where we build to build to print. Here it is a solution that we are co-evolving with the customer based on the market research done by the customer.
Okay.
Thank you, Kaushal.
Can I ask one more question?
I request you to just join the queue again, please, if you don't mind.
Sure, sir. Sure, sir. Thank you.
Thank you. We have the next question from the line of Rushabh from RBSA Investment Managers. Please go ahead.
Hello.
Good evening, Rushabh. Please go ahead.
Yeah, thank you, sir. So just from a strategy perspective, for the next 3-4 years, the targets that we have set for ourselves, are we pivoting to a multi-segment, say multi-product, multi-customer company, wherein the concentration of each segment could be, say, less than 1/3 or so as a total revenue pie? Is that the direction that we're heading towards?
We are focusing on three vehicle segments, two-wheeler being a large part of that, followed by commercial vehicles and off-road vehicles, all of these which we already have lead positions. We have re-entered the passenger vehicle four-wheeler segment and today have a 70% market share in Tata Motors for the driver information system. And we are in the process of entering a few other four-wheeler Indian-based OEMs. Our plan is not to become a market leader in the personal passenger vehicle segment four-wheeler in India, but focus on two-wheeler, off-road vehicle and commercial vehicles, not just in India, but globally. Second is from an inorganic standpoint, in order to remove the dependence on auto, which is cyclical, we want to enter into instrumentation in the industrial segments where the margins are better and it is de-risking our business model, and we are evaluating the same, how do we enter using inorganic means. The third vertical we are in today is ACFMS, which stands for Actuators, Controllers and Fuel Management Systems. We anticipate between 60 to 65% revenue coming from driver information systems and connected vehicle solutions, and about 35 to 40% coming from the ACFMS vertical. This is where we hope to be in 2004-FY26. I hope I've been able to answer your question.
Thank you. I'll just get back in the queue, sir, for more queries. Thank you.
Thank you.
Thank you. The next question is from the line of Bhaumik Shah, an individual investor. Please go ahead.
Hi, good evening, sir.
Good evening, Mr. Shah. Please go ahead.
Yeah, so just wanted to check with you, as a recent development actually, in which the Minda has just 1 week before only have given the application to Competition Commission about raising their stake into our company. So as per our last con call and actually your last press release, what is our current standpoint of the management on that actually? So in the last statement you had committed that we are fully committed. Our present management is fully committed So to be with the company. So we are maintaining that stand.
Yes. I'd like to break up my answer into two parts. Minda Corporation had very clearly stated that their intent was to only acquire 15.57% as a financial investor in our company. Now, on the 2nd of May, they have announced that they are applying to CCI to increase their stake to 24.5%. We will take all legal measures, whatever is required, to oppose that petition for the simple reason they are competitors and they have not sought prior permission from CCI, number one. Number two, I would like to reiterate that the current management stands absolutely committed to running and growing this business in the coming years, and I have absolutely no intention of ceding control of our business at not just now, but any point in time in the near future. We will take whatever steps necessary legally and financially to maintain absolute control of management and board of this company to continue to nurture value for all of our stakeholders.
Thank you so much, sir. This was really helpful for us actually because as stated earlier, actually, the Minda Corporation intention does not look like just a financial investment, as their moves clearly suggest that their intention is something else, which you stated correctly, and we are taking the word of commitment from your side that you are fully with the company. So that is a great. This will be taken as a great actually thing for the market as well actually. Thank you.
Mr. Shah, I would like to further reiterate, this is a statement that I have made in person to the leadership at an MD and CEO level to each one of our key customers, number one. I have publicly made it to each and every employee of ours and each and every significant supplier of ours. So I have made this statement publicly to all of our stakeholders, and I will do whatever it takes, legally and financially, to ensure that I uphold this promise that I have made.
Thank you so much, sir. Thank you so much and all the best.
Thank you, Dr. Shah.
Thank you. The next question is from the line of Chirag Singhal from First Water Capital. Please go ahead.
Yeah, congrats on good set of numbers. So just two questions. First, on the 4,000 crores target that you have set. So is this based on some commitments under the existing contracts with your clients, or you are factoring in some growth based on the outlook that you have over the next 3 years?
Good evening, Chirag. I will answer this in three parts. Number one, we have assumed that the India growth story is going to be muted in the next 3 years. So in all of our assumptions, we have taken very muted growth because we believe that whatever economically is happening in the rest of the world will have some resultant impact on India. So we have factored that into our growth projections. Point number one. Point number two, we are working on many of our products are solutions and not like a casting or a wiring harness, which are just built against a specification and delivered to a customer. So many of our products, from being given the LOI, confirmed commitment from the customer, to start of production is anywhere between 18 to 24 months. So we know what our top line and what our capacity utilization is going to look like for the next 24 to 30 months. It is against that we are creating capacities and investments, and we are projecting what our turnover is likely to be. And as I mentioned earlier to Mr. Dante Vadia when he had asked this question, is we have failed to grow in certain areas, whereas we have grown better in certain areas. So we have put all of these probabilities into projecting that number. Lastly, we are also looking at product premiumization, where we see a mechanical driver information system moving into electromechanical, an electromechanical moving into an LCD, and an LCD moving into TFT, which means even if vehicle production remains fairly flat, the value per product is going up, which is going to give us top line and bottom line growth. I hope I've been able to answer your question.
Yeah, that definitely answers. Thanks for the elaborated answer. What I understand is that the most of the growth in the top line that you are targeting to achieve in the next 3 years will mainly come from the existing commitments that you have, because you mentioned that you already have a visibility of the next 24 months based on the orders that you get from the clients.
That's right, Chirag.
Right. So coming to my next question, so you mentioned...
Can I just request you to follow the housekeeping rule and come back into the queue? I think many of the other people have come back onto the queue for their next set of questions.
Sure, I'll come back in the queue. Thanks. Yeah.
Thank you. We have the follow-up question from the line of Yash Dantewadia from Dante Equity Research. Please go ahead.
Hi. So my next question is regarding EVs. What percentage of your sale goes towards EVs for information systems as of today? And how is this shaping up?
We are completely EV ready, and we are engaging with multiple players on multiple EV platforms. As a percentage of our driver information system and connected vehicle solution vertical, our sales to EV is just about 7 to 8% now, but which will keep growing in the years to come, because I'd just like to explain to you, in a driver information system, whatever be the form of propulsion, the driver information system will have to work. So whether it is filled with fuel or hydrogen or electricity or fuel cell, the driver information system continues to do its job of showing speed, left, right, navigation, Bluetooth connectivity, fuel level, whatever form of fuel, and other indicators. And currently we are working with almost 22 EV vehicle makers in the country, small and big.
So right now your percentage of sale is only 7 to 8%. In the next 2 years, how do you see this shaping up? And is it a higher margin business compared to the rest of the business?
No. The margins of a driver information system will continue to remain the same, because I don't see any reason whatever is the form of propulsion, the product is going to remain the same. So there is going to be no impact on the margin. Okay, and this will keep growing as the sector keeps growing. Whatever is the sectoral growth of EV penetration, we will be maintaining the same thing because we are working with all the key EV makers.
Thank you. Thank you for taking my question.
Thank you.
Thank you. The next question is from the line of Kaushal Kedia from Wallfort PMS. Please go ahead.
Sir, how much of a market share do you have in TVS iQube?
100%.
So if TVS, as per the monthly update, they sold 1 lakh units till now since inception, you have supplied 1 lakh BIS to them in their electric vehicles. Is that a fair assumption?
Yes. No, it's not a fair assumption, it's a fact.
It's a fact, okay. And so we can assume, so if TVS iQube keeps growing, I think it's a proxy to, maybe our product is a proxy to it, so that's great. So, okay, I'll get back in the question, please.
Yes. Many of the platforms we are single vendor, so whatever is the growth of that platform, we will also be growing at that level, not just in TVS but with other customers also, which I will not be at the liberty to discuss because this would be a conflict of interest with the customer.
Okay, sir. Thank you. I'll get back in the question. You have one more question.
Thank you.
Thank you. The next question, which is a follow-up question, is from the line of Rushabh from RBSA Investment Managers. Please go ahead.
Yeah, thank you again, sir. So just want to understand what's the Pricol's pricing strategy across the product segments. Is there a range that you can share versus the competitors?
We do. Are you talking of strategy or are you talking of market share? Can you be clear, Rushabh, please?
I'm just asking in terms of pricing versus competition. Are you charging at par with the competitors? Is it slightly premium or discount? If you can just give a range across a product range. Wherever, we're not a single vendor.
Commodity, Rushabh. Okay, so it is based on the hardware and the software that goes into the product. But let me also reiterate, I will not be paid a huge premium over the competition because end of the day, the vehicle maker also has to maintain his EBITDA and his profitability. So that is how, in fact, very recently I had someone asking, there is so much of software going into your DIS compared to 3 years ago. The software companies enjoy an EBITDA of 35%. Why is Pricol not having an EBITDA of 30-35% in its products, especially in the DIS? And my answer to that is, I'll have to be in line with what my customers are enjoying in terms of profitability. I can't have a 30% profitability when my customer has an average EBITDA of 11 to 12%. If my customer has a profitability of 11 to 12%, at most in some of my solutions I can go up to 15%, which is why to improve our profitability, we are looking at non-automotive industrial instrumentation, which in terms of technology is at least a decade behind automotive instrumentation, where the profitability is much higher. And that will help overall from our instrumentation business improve the profitability.
Okay, thank you. So I have one more question. Can I ask or should I come back?
No, please come back to it if you don't mind.
Okay, sure. Thanks.
Thank you. We have the next question from the line of Himanshu Singh from Prabhudas Lilladher. Please go ahead.
Hi, good evening, sir. I just wanted to understand what are your growth forecast or your growth assumptions for the two-wheeler industry over the next 3 years?
Good evening, Himanshu. I think I'd answered in an earlier question or a context of an earlier question. We are assuming fairly muted growth for the next 2 to 3 financial years because of various global incidences and global economic meltdowns. While we still believe in the India story, we believe that the India story will be a slightly muted story. So at least in our internal cash flow assumptions, we have assumed very 7-8% growth of the two-wheelers or 5-6% two-wheeler growth in India. And we have based our assumptions on that. In fact, I told our CFO, please assume 0% growth and work on your cash flows. So where our growth will come from is premiumization of the product, as I mentioned earlier, which will keep growing our top line to achieve our desired level of 3,600 to 4,000 crores based on the current order pipeline and share of business and LOIs that we have.
Okay, so most of the growth should come from electric vehicles and ICE should be flattish or decline. Is that?
ICE will not be declining. ICE, we now see a lot of entry-level ICE launches also, like the Honda Shine, etc., which is going to see some growth. EV will grow at a much faster rate than ICE vehicles. I'm talking two-wheeler segment as a whole, I believe will grow at around 5 to 8% average over the next 3 years.
Okay, thank you.
Thank you. The next question is from the line of Dhairya Trivedi from DJT Investments. Please go ahead.
Sir, good evening. I just had a question on the debt. On the capex. How are we planning to fund this capex of 600 crores over the next 2 years? Are we looking to really take on debt, or is it all through internal accruals?
Good evening, Mr. Trivedi. That's a good question. I think I've answered it in an earlier investor call, and I'm happy to answer it again for the benefit of participants in today's call. We are anticipating about 600 crores of capex over the next 24 months, most of which is going to be funded by internal accruals, or rather all of it is going to be funded by internal accruals. The timing of investment versus the cash inflow into the company could have a mismatch. So I mentioned in an earlier call that about 200 crores of debt we will be taking on, but it's not going to be long-term debt. It is going to be bridge capital that we will be taking up because of the timing of the cash flows.
Perfect. Got it. Thank you so much.
Thank you. There is a follow-up question from the line of Kaushal Kedia from Wallfort PMS. Please go ahead.
Sir, in what products do we compete with Minda?
In the driver information system is the common product. Of course, they are significantly smaller than us. We have a very large market share vis-a-vis Minda.
But isn't our product far superior? Like it's not even like comparable. Would that be a fair statement to make?
I would not like to answer this question, Kaushal, because I think it's not ethical on my part to comment about a competitor's product. But the fact that we have a significant market share and have grown significantly is probably a testament to our product and its product's quality.
But so the market share is more because iQube has a larger market share, right? Is that again a fair statement to make?
You're only talking of one platform, iQube. There are 40 vehicle platforms in India that we supply to. You can't just base it on one platform, iQube from TVS. That is not ruling the market or having a very large market share in the market.
iQube has
in terms of value terms, in terms of value terms, we have about 50% plus of the two-wheeler market in India of the driver information system. But I think it's unfair on your part to, or my part to say how good my competitor's product is or not. But obviously my product is good. I can attest to that because my market share has grown over the last 3 years significantly.
Okay. Without being derogatory, I was asking that, so sorry if I hurt any sentence. Thank you.
Thank you.
Thank you. The next question is from the line of Shreyansh Agrawal, from a retail investor. Please go ahead.
Hi, am I audible?
Yes, good evening, Shreyansh. Go ahead.
Yeah. So just following up from the earlier answer where you had mentioned about premiumization, just wanted to understand that are we also looking to enter into a market segment of bikes like BMW or a Hayabusa? Or are we satisfied with the likes of TVS or Hero Honda? Any plans around for that regarding?
We are very actively working, Shreyansh, with BMW. We are not just working on products, but supplying products to BMW. And not just to BMW, we are supplying to Harley-Davidson. We are supplying to Triumph. We are supplying to Ducati. We are supplying to KTM. And just for your information, we are the world's second largest driver information system manufacturer for two-wheelers.
Got it. Thank you. Thank you so much.
Thank you.
Thank you. There is a follow-up question from the line of Rushabh from RBSA Investment Managers. Please go ahead.
Yeah, thank you again, sir. So sometime back there was a news article, news interview, wherein we are looking to split the Pricol entity into 2-3 entities. So is there an update on that, sir? We are trying to appoint a strategic partner with us, so I'm not sure if there's an update.
We have prepared the company from a manufacturing footprint and from a management organization to be split into multiple companies if and when the need arises. We have not appointed anyone of strategic consultant to do that. Now, let me elaborate a little bit more on that. This is primarily to unlock better value for the shareholders. Today, we have two completely different product verticals under one company. Right? If there is a need to align with some other company, let us say a multinational, that will help us increase our global footprint or give us access to technology that will be very, very difficult for us to develop in the short to medium term, then we will look at this. So which is why we have plans for DI, CVS, which is our driver information and connected vehicle solutions vertical, in the south, in the west, and in the north for each of the auto hubs. We similarly have plans for the ACM FMS vertical in each of these hubs. We have segregated the engineering also to have engineering ecosystems for each of these verticals and supply chain and manufacturing ecosystems for each of these verticals. What is common is corporate finance, secretarial, IT, HR, and business development. So if and when an opportunity arises and there is a need which will help us catapult each of these businesses to other geographies and other technologies that will help us significantly increase our footprint and value to our shareholders. We want to be prepared for that, and that is what I had mentioned in an interview some time ago.
Okay. So we might look into it whenever it's required. Okay. Thank you so much.
Either required or an opportunity arises that will add tremendous value to our shareholders and the organization. Either or. So we wanted to be ready when an opportunity arises or when a need arises. We want to prepare the organization, which is what my management team and I have worked on over the last 2 to 3 years and created that.
Do you see it happening over the next 1 year?
Highly unlikely over the next 1 year.
Okay. Thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star then 1 on their touchtone telephone.
Ma'am, as there are no more questions, can we perhaps close the call?
Yes, sir, surely. Sir, there is nobody in the queue now. Hello?
Please go ahead, ma'am.
Yes, sir. Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments. Over to you, sir.
Thank you, ma'am. Thank you, Valorum, for organizing and hosting this call. Thank you to all the participants, and thank you all for the valuable questions and your patient hearing. On behalf of my able CEO, Mr. Ganesh, CFO Priyan, Siddharth, Director Strategy, and myself, I thank you all for participating in this call and look forward to connecting with you all for the H2 call of FY24. Thank you. Good evening.
Thank you, sir. On behalf of Valorem Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.